Hey, Frugal Living Man. We like to take these deep dives into topics you might find interesting. And, well, this one kind of has your name all over it. Tesla's Q4 2024 earnings are out. And we're going to go beyond just the headlines about, did they hit or miss their targets and what happened to the stock price?
Yeah. Those are important, but there's always more to the story.
Exactly. So let's start with the top-level numbers. Tesla's revenue came in at $25.7 billion. But analysts were expecting something closer to $27.2 billion. And earnings per share were 73 cents, a little bit lower than the projected 77 cents. Not huge misses, but enough to make the stock dip about 5% right out of the gate.
Yeah, the market can be pretty sensitive like that. But does a 5% drop really tell us what's going on with Tesla?
That's what we're here to figure out, right? I mean, one comment I saw online actually said, quote, growth is dead, unquote, for Tesla.
Wow. A little dramatic, don't you think?
Oh, for sure. Yeah. But it does make you think. If you look at their automotive revenue, it barely increased in 2024 compared to the year before. And their operating expenses have gone up. But their earnings per share actually dropped by 22% for the whole year. So is this really the growth story everyone thought it was?
It definitely challenges the perception of Tesla as this unstoppable growth machine, right? But maybe we need to redefine what kind of growth we're even talking about. Is it just revenue, or is it user base, or something else entirely? And how does this slowdown affect their long-term plans?
Those are the big questions. But on the other hand, they are still profitable. And they've got a pretty impressive $36.6 billion in cash reserves.
That's a lot of breathing room. It's like a cushion that lets them navigate any short-term challenges and invest in new technology and go after those future opportunities.
Speaking of which, they actually lowered the average selling price of their Model S, 3X, and Y vehicles.
Now, that could be part of the reason for the earnings miss.
Right. But it also suggests maybe a different strategy.
Yeah, maybe they're playing the long game.
So are they saying short-term profits are less important than grabbing market share and making EVs more affordable?
Possibly. They've been using a combination of direct price adjustments, financing options, and changes to their sales mix. It's a gamble for sure, but one they might be able to afford with that cash stockpile.
It's a fascinating move.
Yeah.
But can they actually maintain profitability while trying to become the EV brand for everyone?
That's the million-dollar question.
And we can't forget about their record deliveries and energy storage deployments in Q4. Over 495,000 vehicles delivered and 11 gigawatt hours of energy storage deployed.
Okay, so that's got to count for something, right?
Yeah, I mean, it shows they're still executing in some key areas.
And it points to the bigger picture. Tesla's energy business is becoming a real force. They had record gross profit in Q4. And with the new mega factory in Shanghai, ramping up their production capacity is about to explode.
So we've got this interesting contrast. On one hand, their core automotive business is showing signs of slowing growth and missed expectations. But on the other hand, their energy business is booming. And they got that mountain of cash reserves.
It's definitely a mixed bag.
So we really need to dig deeper to figure out what it all means for Tesla's future.
And for you, Frugal Living Man, what it means for anyone considering investing in them.
Absolutely. And speaking of the future, we haven't even touched on the upcoming product launches, especially those more affordable models, and the advancements in full self-driving.
Oh, yeah. Tesla's always pushing the boundaries there.
So how do those innovations fit into the overall picture? We'll dive into that right after this.
Yeah, those new models could really shake things up.
Right.
Imagine if Tesla became like the Toyota or Honda of EVs.
Right.
Reaching a much wider market than ever before.
Yeah, that's a lot of potential growth.
It is. But it also means playing a different game.
Not just luxury anymore.
Exactly.
More about volume.
Yeah.
And they've got that new Model Y launching globally. Right. I think it'll keep being the world's best-selling vehicle.
I think it has a real shot. But the real game changer here, Frugal Living Man, that's got to be the full self-driving, or FSD as they call it.
Yeah, that's the big one.
They're aiming to launch an unsupervised version this year.
Unsupervised? So, you just tell a car where to go.
Yeah.
And it just does its thing. No human needed.
That's the goal.
I don't know. That sounds a little ambitious, don't you think?
Ambitious is putting it mildly. I mean, there are huge regulatory hurdles. Public perception is a big factor.
Yeah.
And of course, the technology has to work flawlessly. But if they can actually pull this off, Tesla's not just a car company anymore. They're a mobility platform.
Whoa.
Think about it. A whole fleet of self-driving taxis.
Okay. Now, that's a vision I can get behind.
Right.
But it's a big if.
For sure.
There are a lot of other companies in this race. From those big tech giants to the traditional automakers.
It's a crowded field.
So what makes Tesla think they can win?
Well, they have a huge advantage. Data. All those Teslas out there on the road right now, they're collecting tons of real-world driving data. That's what their AI needs to learn and improve.
So basically, every mile driven is a lesson for their AI.
You got it.
That's pretty clever.
While everyone else is playing catch-up, Tesla's already got a head start.
With their own customers doing the training for them.
Exactly.
Okay, but let's shift gears for a second. We've been talking a lot about cars. But what about this energy business that everyone's buzzing about?
Oh, yeah. It's easy to forget about that side of things, but it's a crucial part of their bigger picture. You know, they're not just about electric vehicles. They want to be the one-stop shop for all your sustainable energy needs.
Right. Like when they bought Solar City a few years back.
Exactly. That was a big step towards becoming this vertically integrated energy company.
Solar panels, home batteries, electric cars.
Yeah.
The whole package for a green lifestyle.
Yeah, that's the idea.
But can they really compete with those big energy giants?
Well, they're certainly ramping up production. Those mega-pack utility-scale batteries at the Shanghai Mega Factory, along with the Powerwall home units.
And demand for renewable energy is only going up.
Right, so they're in the right place at the right time.
And let's not forget about the supercharger network.
Yes. Their secret weapon.
Imagine frugal living man taking a road trip in your EV and not having to worry about where to charge.
It's a game changer.
And Tesla's making it a reality.
And they're not just building more chargers, they're innovating. Those new V4 supercharger cabinets, they're smaller, more powerful, and they can even charge other EVs.
Wait, what? So they're letting other brands use their network?
Yep.
Why would they do that?
It's actually a brilliant move. Think about it. They get to generate revenue from a wider customer base. And it helps position the supercharger network as the industry standard.
So it's a win-win.
Exact.
They're not just selling cars, they're shaping the whole landscape of electric transportation.
That's right.
That's a bold vision.
It is. But with all that ambition comes some big challenges.
For sure.
Tesla's facing more competition, production hurdles, and of course the economy is always unpredictable.
Yeah, can they really deliver on all these promises?
Oh, that's what we're going to dig into next.
Yeah.
And what it all means for your investment decisions.
So frugal living, man, we've talked about the good, the bad, and the uncertain when it comes to Tesla. But one thing's for sure, the competition is heating up. Those traditional car companies, they're finally getting serious about EVs.
Yeah, they're playing catch-up for sure.
And they've got a lot of experience and resources behind them.
They do, but it's interesting how Tesla's responding to that.
How so?
They're not backing down. If anything, they're leaning in.
Like with opening up the supercharger network.
Exactly. It's like they're so confident they're willing to help the competition.
But by doing that, they're also setting themselves up as the standard.
Right. The go-to infrastructure for the whole EV world.
It's a pretty savvy move. But there have been some bumps in the road, haven't there?
Well, yeah, I mean, no company's perfect.
Like those production delays and the occasional quality control issues that pop up. And then there's Elon Musk himself.
Yeah, he can be a bit of a wild card.
To put it mildly.
All of that adds uncertainty for sure.
And we can't forget about the economy.
Oh, yeah, that's the big wild card.
Rising interest rates, inflation.
All that can put a damper on consumer spending.
And make those growth targets even harder to hit.
It's a lot to juggle.
For any company.
Absolutely.
But Tesla's shown they can be resilient.
They have. They bounce back from setbacks.
And they've built a loyal customer base. Like almost cult-like devotion.
It's true.
People really believe in the mission, even when things get tough.
I think it's that brand power.
Tesla's more than just a car. It's a statement.
It represents innovation disruption, a glimpse into the future.
And that kind of brand loyalty is priceless.
It really is. But for an investor like you, frugal living man, the question remains, is Tesla still a worthy investment?
That's the million-dollar question, isn't it?
It is.
We've seen the good, the bad, and the uncertain.
It's a high-risk, high-reward situation.
Not for the faint of heart.
You got that right. But here's the thing. If they can execute, if they can navigate these challenges and really deliver on that vision, Tesla could completely reshape the world as we know it.
That's a bold statement.
It is, but that's what makes them so compelling.
So where does that leave us? We've gone deep on Tesla's Q4 2024 earnings, looking beyond those headlines.
We've seen missed targets, but also record energy storage, bold moves in affordability and self-driving, and a company that just keeps pushing the boundaries.
So frugal living man, We've given you the information. Now it's up to you to weigh the risks and the rewards.
Is Tesla still the growth story everyone thought it was?
Hmm.
Or are they transforming into something even bigger, even riskier, and potentially even more rewarding?
That's for you to decide. And that's what this deep dive is all about, giving you the knowledge you need to make those informed decisions.
Whether you're an investor or just someone who's interested in the future of technology and transportation.
Tesla's a fascinating company, and they're going to keep making waves no matter what. That's for sure.
So thanks for joining us on this deep dive, Frugal Living Man. And we'll see you next time for another journey into the world's most interesting topics.